Initial public offerings are a significant milestone for companies, marking their transition from privately held entities to publicly traded corporations. However, navigating the world of IPOs requires careful consideration and analysis. In this video, we'll explore the importance of IPOs, key factors to consider, and possible upcoming IPOs. Why do IPOs matter? IPOs play a crucial role in the financial markets for several reasons. Firstly, they provide companies with access to capital from public investors, fueling their growth and expansion plans. Additionally, IPOs offer liquidity for early investors, founders, and employees, allowing them to realize their investments. Moreover, going public enhances a company's visibility and credibility, attracting customers, partners, and talent. Lastly, IPOs set a market valuation for the company, serving as a benchmark for future financial activities. Before investing in an IPO, it's essential to conduct thorough due diligence. Here are some key factors to consider when investing in an IPO. 1. Company fundamentals. Evaluate the company's business model, financial performance, growth prospects, and competitive advantages. Understanding this is crucial for assessing long-term potential. Number 2. IPO pricing. Evaluate the offering price relative to the company's valuation, earnings potential, and comparable companies in the industry. Sometimes IPOs are priced too high, leading to limited upside for potential investors. Number 3. Lock-up periods. These are periods in which early investors are prohibited from selling their shares. A flood of shares hitting the market after the lock-up period expires can put downward pressure on the stock price. Number 4. Underwriters and market conditions. Consider the reputation and track record of the underwriting banks handling the IPO. Also, assess the overall market conditions and investor sentiment, as these can influence the success of the IPO. Number 5, legal issues and long-term potential. Investigate any regulatory or legal challenges that could affect the company's operations or future prospects. Think about the company's long-term potential rather than just short-term gains. Here are some of the IPOs to look out for in 2024. Reddit, the popular social media platform known for its online communities, seeks to launch its IPO today. The company was valued at about $10 billion in a funding round in 2021 and is seeking to sell about 10% of its shares. Shein, a fast fashion retailer that has become popular for its low prices and trendy clothes. It is estimated to have a valuation of up to $60 billion. The company's regulatory environment is complex due to its unique history. Monzo, a digital bank in the UK, it is estimated to have a valuation of around $4.5 billion. The company does not appear to be in a rush and is no date confirmed. It's expected to go live late 2024, early 2025. Chime, a mobile banking app that is popular with millennials. It was expected to go public in 2023, but also postponed its plans. The CEO says the fintech is IPO ready for 2024. BrewDog, a craft beer company in the UK, estimated to have a valuation of around £1.8 billion. There is no set date yet for an IPO. However, BrewDog has until August 2024 before it needs fresh funding to support its listing. Starling, a digital bank in the UK, it's estimated to have a valuation of around £1.5 billion. Having expected to go live in 2023, the company is in no desperate need of capital and may be a good few months before the launch is announced. Investing in IPOs can be both rewarding and challenging. By carefully evaluating company fundamentals, IPO pricing, lock-up periods, underwriters, and regulatory issues, investors can make informed decisions. It's essential to maintain a long-term perspective and focus on the company's growth potential beyond the IPO. Make sure you follow XTB to stay up to date with the latest on trading and investing.